President Trump will formally steal back the competition today with new tariffs. Joining me to talk about the trade is Virtu Financial's Matt Cheslock. There we go. There's that smile. How you doing, Matt?
Good. I was a good chuckle out of that witty pun.
Hey, that's what I'm here for. Now, I was taking a look at U.S. steel. Shouldn't it be ripping right now? It looks like a steel rod in the middle of the chart, sideways.
Yeah, you know what? I think the news is out there. I don't think we're going to see a 25% increase in the steel tariff. I think that's a negotiating ploy. So a lot of the trade may be built in. We saw steel have a tremendous run up after it was announced last week. So it might be kind of selling on the news type event now.
Yeah, and lawyers are still working out that before his announcement today at 3:30. The Russell I'm looking at. You don't feel like it's going to be vulnerable at all to possible tariffs? Small caps, I mean.
Yeah, I mean, it should. I mean, small business has, anytime they have to pay a little bit more for their products and things, it's going to affect their bottom line much greater than it would affect a larger company. They have less leverage and things when they negotiate some of these things. So it should affect it a little bit more, but it's been definitely more insulated. We haven't seen the big moves in the Russell that we've seen in the Dow. So it brings up a good point. Is it lagging a little bit? And that's a good thing to watch as you go forward. Maybe that's a trade that you want to get on now. Maybe you start to say, you know what, we're going to show signs of weakness in the Dow, that the Russell hasn't been there yet. Maybe that's a trade we want to put on.
Oh, nice. Well, I don't know what's more divided, the opinions on Trump's trade or how investors view healthcare stocks today after Cigna looks at interest in Express Scripts. Do you find any benefits in this space, considering that there's been a lot of reorganization, right?
Yeah, you would hope that would be good for the consumer, but when you have less choices, it often doesn't work that way. So, I think you start to see, Amazon and Berkshire and J.P. Morgan get together on something that's outside of their realm. That puts a scare into the leaders. And you could see some more mergers go down the pipeline, or at least some more combinations and partnerships to tighten up the line, so you can ensure that you can meet these top line estimates and things. Shareholders have to be rewarded too on this, and unfortunately, sometimes who suffers in that is maybe the patient.
All right, now Matt, we have NFP tomorrow. Game changer. What do you think?
No, I don't think it's a game changer. I think the Fed has already dialed into what they're going to do in March. So, again, we're looking out. Is this data going to be dependent enough for them to go for the fourth rate hike? And I don't think the one number that we're going to see after this is going to be enough to indicate that it's going to be a fourth hike. The question is it sustainable, the numbers that we saw from the last one? They were so strong. Were they holiday related? Were they tax break benefit related? So we need to see more of a trend than more of a one-off.
All right, cool, Matt. Well, I'm gonna take a fifth rate hike, just like the 19th hole, and let's get out of here. Right? It's Thursday. Thank you so much. Have a good weekend.
All right, you too. Watch some hoops.